now move forward to the next panel discussion of the day, titled From Investors' Perspective. In this session, the panelists will discuss how new age startups can attract more investors in India. For this session, we have Bhavesh Shah, Managing Director, Head, Equirus; Kavish Kothari, Principal, 8 Roads Ventures; Prakhar, Khanduja, Investor, MSA Novo; Chetan Prakash, Sancheti, Partner, Anicut Capital; Vivek, Jain, Director, Stride Ventures; Maneesh, Srivastava, Founding Partner, Alphavalue Consulting; and to moderate this session, we have Siddharth, Venkataraman, Manager, Revenue and Subscriptions, Indian Express Digital. Please welcome our panel.
Good afternoon, everyone. It's a pleasure to be with all the esteemed speakers. Let's get going with the first question, which I wanted to have a common question, which I wanted to float. Primarily because, India has ended 2022 with a $61.6 billion, PE VC investments across 2,000 plus deals, but there are contrary reports that funding dropped this year. And truthfully, what is the real scenario? And to add on to it, another question would be that how bad it is, if you, compare it with markets like America. So any one of you can start, and then I would like everyone to put in a word to that.
Good afternoon to all my panelists. To start with, yes, I think the situation is tough. Situation is difficult. But having said that, we always look at positively. We just feel that, boss, if at all you are able to stay afloat for maybe next 6 months, 1 year, 2 years, then I think it's pretty seasonal. I think this is a business cycle everybody is undergoing. We have seen this in 2000, 2008, 2013, 14, 2000, maybe 23. So it's a business cycle which probably will kind of come over. Only problem that some of the startups needs to think about is how to have a longer runway. So probably this might want them to relook their own strategy in terms of how should we keep float. It might need your cost cutting. It might need layoff, which is happening. And if at all you are kind of stay afloat for the next maybe 6 months, 1 year, please be rest assured, LPs are there to invest in India. Please be rest assured, money is going to come to the India. Please be rest assured about that. Wait and watch. Yeah, that's my starting comment. Yeah.
Sure.
Yeah, if I may add to that, just to give a little more macro perspective on this. So after the pandemic, I think there was a huge inflow of funds which happened, which led to $70 billion being raised in the year before,
yes,
which came down to $60 billion roughly last year. And I think the trend was going to be going upwards, but it came down. The primary reason was the Ukraine war, because of which the supply chain got disrupted. The interest rates went up, which froze the capital, so to say, a little bit. And the capital went into more premium assets. So when I say premium assets, in the sense, people were now looking to do more exits, and exits were going to come only after the profitability of the company was very, very visible. So earlier, all the funding which used to happen in companies for growth at the cost of even burning money, that philosophy, or that was a paradigm shift which happened in the minds of investors. Now they were clearly looking for companies where there's a clear visibility for profits, clear visibility for exits to happen, and that's how the money has come down to that extent. And as my fellow panelist Chetan pointed out, I think it's just a matter of time. We might see funds coming back, because I think the entire ecosystem has realized that the money is not going to come to burn. It's only going to come for companies where there's profitability. So every company is reorienting their business models to make sure that they're making profits.
Hi, good afternoon, everyone. I think I have slightly different perspective. This is just a reality check. As he mentioned, it's every year that happens. I remember when I was a founder in 2015, 2016, and I was struggling to raise capital, and I went to the likes of SoftBanks, Tencent, Sequoia, etc. Everyone said, oh, it's a down market, right? And in 2016, everyone knew the public market in the US was also struggling. And all their most LPs of major VC funds are US dollar funds come from the US. So whatever happens on the US market reflects on frontier and emerging markets like India. Having said that, this is also an opportunity for founders to build. And like being a VC, an investor game is not a short-term game. It's, someone was giving an analogy of cricket, it's a test match. We raise money for 12 years. We have to give returns after 12 years, right? And so in short term, if something is happening, yes, it, a morale goes down, etc., etc. But at the end of the day, businesses are there to make money, not to burn money. And this gave a reality check on, all founders as well as we see that, you dhande banane, not, just be there, live in a bubble and burn money to acquire customers. Anyone who's building, if you go around, go to Bangalore, Delhi, Bombay, you meet any startup founder, the game has changed from how much growth they have achieved versus how much profitability they have, right? So it's just a reality check, and it's very good for the ecosystem. And thankfully, as he mentioned, it's a cycle. Yes, it's a cycle. But if you go, just do a Google search on how much capital VCs based out of India have raised, it's a lot. So all that money, billions of dollars, someone told me, it was $4 billion in the last 2.5 years. Someone told me in last 5 years we have raised, India-based VC, PE funds have raised, $20 billion, etc. So whatever that number is, that's going to be deployed in the next few years in India. So it's not a funding winter. I think it's a winter of finding good companies to invest.
I think Prakhar has made a very important point. I think considering there have been a lot of money raised, and like again, I come back to my second question, especially for a lot of startups who are worried about their future. So how bad it is, do you think, especially in India, and especially if you compare markets like America or other markets which are going down? What's your take on that?
Hi, good afternoon, everyone. So I totally agree with my fellow panelists that the investors have started. Maybe till last year it was more about the growth and the scale. This year it's more about the profitability and sustainability, obviously. So we still believe that there is good businesses are there. There is a lot of opportunity within India where there are gems which are hidden, and what we are trying to do is that the money will flow into those gems now, as compared to maybe earlier years where the valuations were crazy. Now valuations have come to a level where they should be, and good businesses will keep on raising capital. So there's no like you mentioned, there is no dearth of capital, and there is no there are founders who are resilient, who are trying to create something which is digital, which is helping the economy at a larger scale, and those businesses will keep on raising capital. So we don't see any challenge in businesses raising capital there.
Okay, so that's a positive. But then that brings me to my first question. I would like to talk to Maneesh about this. Especially, you've seen EdTech space, right? So EdTech is not doing well. And, like if I was an EdTech startup, what would your advice be? How should I, what strategy should be followed? And, and what has gone wrong, per se, in the whole EdTech space?
Okay, thanks. So most of the things being said by my fellow panelists, and if you talk about EdTech, or any of the sector, not only EdTech, but FinTech, or any segments which are new age companies, what is happening, like year 2022 start, if you look into, there been access of the funding that has taken place. And that was something more like, if you look into that tech, like close to 108 deals that have striked. And so when you go into segment, there's always like some sort of a bubble that is always being created, right? So now there's a correction that is going on. And those businesses which are based on model which are sustainable in nature, they will able to perform. Otherwise, there is a consolidation that will take place. There will be a lot of the M&A exercise that is going to bound to take place. And if you look into the current scenario, there is a little bit of a recessionary pressure all across the globe, as well as like interest rate is rising. And the question is like everybody, the easy money that used to be, now it's a little bit tough. It's not tough in the sense like to raise the money, but the question is the model that you are looking at. If your model is good, then you're able to raise the money. Because now the investor is looking more, going deep, making a deep dive and looking into whether whatever you are saying, it will not go just on the basis of your projection, whatever you place the projections and you run the show. Those times are gone by. Rightly being placed by the fellow panelists that it is not the time where everyone will look into like the growth at any cost. There need to be a profit element that need to be, and at least not at the net profit level, but at least to the level of the EBITDA. That need to be some foresight we can look into, maybe not be in the current year, maybe 2 years down the line, there need to be some profitability that need to be. So this is basically that need to be, and how to correct it, how to go about it. The model need to be agile, the model need to be pivoted according to the market dynamics, as well as like there need to be like a lot of layoff as you see like going on. It is not a layoff, but it is like a streamlining the business, I would say. Not look from the other sentiment point, but from the business point, there's a streamlining that is happening. So these are the things.
So you want to put it in other way, like re-strategizing the whole
yes.
growth perspective. Is that what you wanted to say?
Yes, rightly placed.
Thank you, Maneesh.
Okay, thank you.
I would move now to Bhavesh. I have a question for you. Specifically, it is believed that the banking sector will go through many more changes, as we move ahead. And the investment banking industry over the years has shifted focus to a more capital efficient and feasible execution kind of business model. There more focuses on capital, revenue streams per se. So in India, where do you see investment banking right now? And also to what extent technology can or is supposed to affect its functioning?
Sure. So, with every disruption, there's a redistribution of wealth which happens, right? So, and from our perspective, there are two major changes. You talked about what are the trends in investment banking and the technology aspect. So from our perspective, our focus goes to those companies who are, very capital efficient, at the same time growing very well and with profits. So we tend to focus on companies which is going to attract capital, because for us that's where the deals will happen, and so we reorient our strategies based on that. The second aspect is on the technology, how it kind of impacts our business. So for our businesses, I think AI is one of the, so far all the technology which was happening, changes were happening were kind of okay, but one of the major changes that can happen through AI is going to be very significant. And today we ask analysts in our team to prepare a presentation, and normally they may take 2 days, and if we kind of pressurize on them, they will come back in 1 day. But with AI, I've just seen a demo of a presentation of, let's say, a Zomato versus Swiggy, for example, a 10-page presentation being created in a matter of just 1 minute. It's like a full in slides GPT, right? So it's insane how this presentation can be made. The analyst can now download the presentation. He can edit it and come back very quickly in 1 hour, and I will be thinking he's such a smart analyst that he's made a brilliant presentation. So I think the onus now is on all of us to rather more than resist this new technology. I think is to adapt this new technology and make our lives more efficient. I think gone are the days when we can I think our, task as a manager is become even more harder to differentiate between a smart analyst and a dumb analyst, because a dumb analyst can also now come up with smart presentations using the help of AI. So I think this is a game changer. I think in the history of mankind, there have been a lot of revolutions, like the Industrial Revolution, then the advent of computer, advent of internet, and I think AI is in that zone, which is a game-changing environment. So from our perspective, we're going to use more of that. I think even on the wealth management side, which is one of the other businesses that we have, wealth manager, unless and until he comes up with something really smart advice, because a normal debt to equity, what should be my ratio? The computer pops out a question, what's your age? It's 60. Okay, so 100 minus 60, so 40 should be equity, 60 should be debt. So that problem is being solved by computers now. So I think the wealth managers need to be even more smarter, and again adapt these technologies to we heard this talk in the morning when Rajiv talked about more enabling than getting threatened, right? So I think use AI to enable yourself rather than feel threatened about it. So I think.
So Bhavesh, what are the areas you think that investment banking needs to improve? If you can give me some more specifics and.
I think the real value out of an investment banker is in the idea generation. So I always think about this as a business where if you're doing where the client has already thought through what has to be done, you're one amongst the 10 banks who are pitching for it, and it becomes a commodity business, and the fees are then commensurate. But if you are able to think through on the business models and suggest proactively what the company should be doing, what the investor should be doing, and I think that's where the alpha lies as far as the investment bank is concerned. So I think over a period of time, the difference between a good bank and a not so good bank is going to be the idea generation, which frankly AI is yet to get there, which I think is still very human in process. So I think that creativity in the thought process, understanding of the business models more deeply, and coming up with innovative solutions are still going to be the major hallmarks for investment banks to survive and thrive going
and
forward.
Bhavesh, just one more, because this is a very important topic, especially for a lot of people who work on revenue. Where does India stand? Considering, we have insulated this from the American industry or from the American market, or recession, if I would put it better. So this is a very important topic, especially for the investment banking sector.
That's a very good question and very topical as well. My personal opinion is no country can be insulated from the rest of the world. You're part of this world, and all the factors, recession, interest rates, they're all going to get imported or exported depending on which country you're in. But I think the good news over here is, as far as India is concerned, and we are all lucky to be a part of this journey, is that India, given its strengths in terms of macro, in terms of its demographics, in terms of its governance right now, where we are, I think we clearly have a good element of shock absorbers built around us for any of these impacts to, any of these trends to impact us very badly. In fact, we might, grow, in fact. So we are in a bright spot, no doubt about it. There's a lot of capital waiting in the wings to come in. I personally see India to be in a 10-year golden cycle right now from here on. From a growth perspective, this is the time for all of us to think smartly, work smartly, and create that wealth over the next 10 years. So capitalize on this golden opportunity, but I think we can't be susceptible. I mean, we are susceptible to the global trends, and we can't be completely insulated from it.
Thank you, Bhavesh. I think that was a lot of positives from there. I quickly move to Kavish now. Kavish, we just spoke about the money coming in, especially in the startup space. What all sectors do you think will get more funds? And which sectors do you think are in the bright spot?
That's a
That's a good and relevant question. Actually, right now, I was just looking at what the other panelists were saying. Fundamentally, everybody here agrees that the India opportunity is real. So if you go back to the basic macros, our GDP collection, our GST collections and GDP growth and so on, I think there is a long-term opportunity for India to continue growing for the next 10 years. So if you look at areas where people can invest into, right, there are two opportunities. One is India for India. India itself is a very large consumption market. We are seeing that new age D2C brands are continuing to emerge, which are catering to various aspects of what people are consuming, whether it's food, apparel, travel, and so on. So we'll see more and more of these plays happen where unorganized markets become organized and there'll be opportunities. And a very large enabling ecosystem emerges. So there will be logistics, there'll be payments, there'll be digital lending. All of these areas have seen multiple players emerge, and while I'm cognizant there are areas where people have actually burnt more capital to build these businesses, but there are sustainable businesses also being built out which will attract capital. The interesting aspect is that I think, and you've heard it multiple times, is more than enough capital available for India as a geography, and that's available for the India for India businesses also, and also the other part which India is shining quite a bit is on the India for the world businesses. So today, as we stand, our IT services industry is close to $200 billion of revenue, which is a fairly significant area, I would say, compared to all the other geos. And interestingly, a new sector has emerged over the last 10 years, which is SaaS. As we stand, SaaS contributes to close to $10 billion of revenues. And these are India or India origin companies. We've seen massive number of entrepreneurs enter this sector and create more value. And they're competing on the global stage. So we've actually truly been able to export products and go away from while we are growing the services part. So that's another area which we'll see a lot more investments happen. And again, the key part here to note is that the key thing which people are looking for are sustainable businesses. So if you can get a large TAM market, so India is a large market and global markets are fairly large, and entrepreneurs, if they build good businesses, there's more than enough capital available for them to continue building and growing these sectors.
That's a very, again, promising response from you. I quickly want to move to Prakhar and also to add to the same question. I just have one more question to that, since you are also an investor. So I wanted to know that, of late, we've also seen a lot of SaaS companies getting funds. So within SaaS, what kind of startups are investors looking at?
So I think to first answer, what my fellow panelist said, to add on to that, Kavish, what Kavish said, I think it's, we need to, so India has a population of 1.3 billion, 1.5 billion. There are only 200 million e-commerce transactors in the country, which is a minority. I look at, emerging markets. As a fund, we invest across emerging markets, including China. And if you look at how China grew, I think India will have a similar story. What we have done in the last 20 years is we have built this great digital infrastructure of payments, of logistics, and also an offline infrastructure with ports and roads, etc. In fact, now somewhere I heard there are now 200 airports in India, which who would have imagined, right? So with a digital and a physical infrastructure, we have built a great foundation for growth to happen. So any sector, when it comes to digitization, India is very new. So if there are only 200 e-commerce transactors in India, 200 million e-commerce transactors in India, imagine how big the opportunity is going to be, right? So if anyone building an e-commerce, I don't think there's just going to be a Flipkart or an Amazon winner or a Meesho winner. There can be multiple players as well, right? Similarly, payments, we have solved payments. Somewhere I read, we are the largest online transacting country of the world, which is great. Now we need to figure out great monetization tools on top. So that is financial, fintech is one of the key sectors we look at. Third sector, which I am very focused on, is there is a massive shift of supply chain happening from China. West, which is countries like US, continents like Europe, they don't want to work, or they want to work, but they don't want to be completely dependent on China. And if you look at global consumption, China, US are the largest. So even if we get a small percentage of the pie, supply chain moving to India, I think that's going to be a big growth factor for startups to innovate on. And that is one sector I'm looking at. Going back to, SaaS, to your second question, I've been a founder, I've been a tech founder, I still code sometimes. I've been fiddling a lot with, the AI tools. I think it's very big revolution coming up. But what I realized is, apart from these proprietary IP or, these large LLMs, everything else in tech is replicable. So anyone who has slight knowledge, let's say to build any sort of a SaaS tool or any sort of technology tool, technology is the easiest to replicate in a business. What matters is GTM. Yes, India has a lot of SaaS companies. We don't fundamentally invest in SaaS. Biggest reason is all that matters is how you sell a SaaS product. One thing which founders in the SaaS space are forced to do is sell in the US market, but they don't realize the cost and the competition of selling in the US market. And they do that because Indian SaaS market or Indian subscription model market or Indian tools market is not big enough as compared to the US or other parts of the world. So I really don't find it attractive at this moment. Having said that, there are probably more than 5,000 companies who have who are anywhere between 100K to a million ARR companies, but there are only maybe 10 companies who have crossed 200 to 300 million ARR, right? So for you to become a great SaaS company, for example, Freshworks or a Zoho, I think you have to create your own sort of vertical to to become a successful SaaS company.
Thank you, Prakhar. If I may ask Chetan, specifically, in India, we are aware that some of the growing startups have been acquired by MNCs, and or probably larger firms. How do you look at the current set of growth, stage startups? Are they good enough to invest?
Okay, I will kind of break this question into two.
Sure.
Let me just give you a quick macro scenario in terms of where the story is. So we are currently at what 2.53 trillion economy. We are planning to reach 7 trillion economy by 2030, maybe at a rate of 7 to 8% year on year. So you will find that some of the large companies, large corporations may grow at say 20%, but that pivot that they want, maybe some say 20% to 30%, that growth pivot, I'm talking only about the large corporations, will not come from the regular business. It will always come from some add-on. Now that add-on is something which a startup can bring in. The point that I'm trying to derive is, not only an MNC, an Indian-owned MNC or a foreign-owned MNC, both these guys would look at, some of the startup companies. They are pretty keen to invest. If you just look at last, say, 3 years or 5 years of time, a lot of companies, be it your Reliance, be it your Tatas, be it your Aditya Birlas, they are open for acquisition. They are acquiring. Every day, if you open a newspaper, you will find some of the company acquiring the other company. Yes, few companies might be at a distress sale, few companies are at a startup, and each startup brings something more value to them. And just one more scenario, just wanted to tell you that, some of the large companies, if you just look at them, they are deleveraged as we talk, which means that they are sitting on good cash. They have a capability to raise huge capital. They are not doing because there is very little need. So they can pump this cash any point of time. From a startup scenario, what we have to do is, again, keep your focus on your business, on your product GTM mix, your profitability, and be open in terms of any opportunity coming and knocking on your door. It can be a straightforward acquisition. It can be a primary, secondary, minority, majority. Please be open. They bring a lot of value to your own ecosystem. So, to summarize the question, I would say, boss, there's a lot of opportunities that are available today in startup ecosystem to be acquired. One more small anecdote that, a large company like a TCS may not be keen in terms of, doing small innovation, maybe, investing in a small innovation. But however, if they like a company which has already innovated, a startup which has already innovated, they would be happy to acquire some of these capabilities just to bring value to their own customer. So keep your eyes, ears open. It's a fantastic journey. Again, it's a marathon. It's not a 100-meter sprint. It's a marathon, 20 years, 30 years marathon that we are all running for. India is a fantastic growth story. 25 years, 30 years, we will be amongst the pretty big economies. So please go for it. Don't look at 1 or 2 years kind of blip that is happening currently.
But Chetan, you're talking from, say, a large company's point of view. I'm talking from a startup's point of view. So there are a lot of people who are trying to come up with some new startups or trying to innovate something, etc., to make it big, right? Like Prakhar mentioned, everybody here is doing business to make money, right? So that's the whole idea. But then if, say, someone like a TCS comes on board and says, I'm going to acquire you, even though I've done some amazing job in that particular space, but that limits my growth, as a startup or as an individual, as a founder. So what would be your view from the startup's point of view?
Again, just to repeat, I would say, boss, it all boils down to the founder's perspective of certain things, situational. If at all the startup is growing at a phenomenal stage, and if he feels that, if he's confident enough that, boss, I'm ready to, spend another 5 years, 10 years, 20 years in my business, go for it. There are very good opportunities that are available on a standalone companies going for growth, be it IT, be it EdTech, health tech, deep tech, or even a standalone companies, be it in manufacturing companies, services companies. There is enough growth that is available. There is enough growth if you are stay put, having a focus on product GTM mix with a profitability. There is enough scope for you to grow. And you need not, if you are not willing for, selling off your company, and if you are believing in your own story, boss, please go for it. I mean, I think nothing is stopping any company.
Yeah, absolutely. I was just asking from a generic point of view for startups, right?
I'm just telling you, the demand across sectors, across market is huge. We are just in that inflection point. Next 25 years, it's an India story.
Right.
Okay. And if you believe in your story for the next 25 years, please, day in and day out, even in your dreams, you should dream about, boss, next 25 years where I am going to be.
Done. I'll definitely do that. Bhavesh wants to add to it.
Yeah, if I may add to that. I think it's a very interesting question. What is the end game from a startup's perspective, right? I personally feel that consolidation is going to be one of the major mantras for growth. As we are speaking, the digital companies are going, D2C companies are going offline, the offline companies are going online. One way to do is to do it on your own way, the other way to do is through consolidation. But I think the good news is there's a lot of private equity capital coming in as well, both on the minority side as well as on the majority side. And some of the funds who are doing these deals on a majority basis, they are actually creating platforms. So they're actually creating conglomerates of companies wherein the startups can be like verticals of, in that platform. And then they start talking to each other from a cross-deployment perspective. And I think the good part about that kind of a construct is the capital is there from the private equity investor, but the operational freedom, etc., to run the business, to grow the business still exists with the company. So probably that is one of the avenues for some of the startups to think about, that if they are able to fit in like a piece of puzzle in the overall picture, and if they are able to cross-deploy and add to the platform, and plus have an upside left for them to capitalize on the synergies going forward, I think that's a wonderful value creation journey that they can embark on.
Thanks, Bhavesh. We're running short of time, so there's just one last question to Vivek, and that is, what is the common mistake that the startups are doing, while they're driving growth? And with this, we'll end the panel because we are short of time.
So one thing that we as Stride have been very careful about is the unit economics. So, what startups or by chasing growth, what we have seen is while they are chasing growth and the business model is there, what they sometimes miss is the unit economics, where on a standalone basis, the product or the service is not making money, and doesn't matter how much money you put in there after for how much growth capital you bring in. The business is not able to sustain itself, irrespective of the number of people you hire, irrespective of the geographies you enter. So one thing that is very important from a starter's point of view is to ensure that you have a positive unit economics when you do your GTM, when you do your when you launch your product or service. First thing that you need to be very sure of is the unit economics, or that contribution margin has to be there. The business should be making money on its own. So if you have that, you will get the investors and you'll get the runway, everything will fall in place. Yeah.
Thank you, Vivek, and thank you, audience, for being such a wonderful audience. And thank you all the panelists. Pleasure.